What's going on, everybody? It's Crypto Interval back with another video. So today I am kind of taking a look at some of the signals that I'll be looking for in the coming months to signal that the bear market could possibly be over. Um, I'm still under the firm belief that we still have quite a bit more downside to go. Um, but I think with each passing week, we are getting closer and closer to max capitulation in the crypto market. So, one of the things that I look at on a daily basis is the dollar strength index. So, this basically just gives you a glimpse at how the US dollar is performing um, in comparison to all of the other fiat currencies around the world. So as you can see right now, the dollar has had a massive run up against every other currency. But in the short term here, it's gotten a bit weaker. This isn't sustainable, I don't think. I think the dollar will continue to maintain its strength over the coming months and maybe for the next couple quarters. But that's just one of the metrics that I look at when analyzing the markets as a whole. Because if you go back and you see where the bull markets of Bitcoin and ETH kind of line up, it's the bull markets happen on these downtrends in the dollar. And it also coincides with falling interest rates or no interest rate hikes. So that's kind of some of the key signals to look for is a dollar that's trending downwards, and um, when the Federal Reserve uh, stops raising rates and then they start cutting them. That's kind of the key signal that we're entering the next bull cycle. So these things can take um, a few months to a few quarters to start to turn around. So it's not like they cut rates and then boom, we're in a full blown bear or bull market again. Um, Things just kind of got to play out. The macro events start playing out, and before you know it, the cycle's done a 180, and um, we're basically trending upward again. So that's the dollar strength index. Um, and the reason why I don't think that the bear market is over quite yet is because it looks like that they want to continue to raise rates by another 50 basis points in December. So it possibly won't be a full 75 basis point rate hike again in December, but they are still raising rates, albeit at a slower rate. But nonetheless, if they continue raising rates, it just continues to flush everybody out of markets. Um, so interest rates are one thing that you should be paying attention to. Um, and as soon as they announce that they have controlled inflation, um, by their numbers, obviously, we all know that the inflation numbers are pretty fudged. So always be aware that they can always change how they calculate the CPI number. Um, so I've heard talks that they could, instead of using a 2 year average on the CPI number like they are now, they could switch it to a 1 year average sometime in the first quarter of next year, which would effectively bring the CPI number back down to around 2%, is their uh, kind of their goal. And then, boom, when that happens, they stop cutting rates. they say that inflation's under control, and then they would probably just coast on that rate for a little while, and then they would start cutting it. Um, the reasons why they would start cutting it is possibly some macro events, like there could be wars or shortages. Like who knows why they would start cutting it? But you know that at some point they will start cutting it. So that's just one thing to pay attention to. um, and it's very important too. So that's how they manipulate the markets and stuff is through the interest rates. So that'll be one big key thing that I look for to kind of signal to myself that okay, bear market's over, and now we just kind of wait essentially and take the market how it is. um, yeah. So these are bond yields. So the bonds are reaching like really high percentages. So as you can see, we are basically just as high as we were in 2009, 10. Um, so that's another thing I'd be looking for is for these bonds to start turning over, effectively forcing people to get rid of their bonds because they're not generating that good of yield. And then essentially, when people cycle out of bonds, they start buying risk assets, like the S&P, just stocks in general, crypto, real estate, all the risk on assets. They cycle out of cash into risk on assets. But yeah, I still really think that um, possibly within mid December to early January, I think that's when we're gonna get our lows on Bitcoin. I think that's when we're gonna hit our 13,000 marks, $11,000 mark. Is sometime between mid December to early January. Um, like if you think about it, Christmas and year end, that's when everybody flushes out. They lock in losses for tax purposes. Institutions sell off over Christmas. So it's just not a very good time for the market. So that's one thing to always kind of remember when you are looking at markets. December, the end of the year is generally the time of cleaning up the portfolios of institutional investors and big players and stuff for tax purposes and all that. Um, that's another reason why I think that the bottom's still not in. Also, a lot of some of these exchanges still need to go insolvent and totally break, um, like FTX did. I still think there's quite a few that haven't done that yet. So when the bottom does reach, it might be very difficult to put money into the market. Um, so you probably won't catch the bottom exactly, just because that either exchanges will shut down due to liquidity issues, uh, or there's like so many variables, right, as to why they won't let you catch the bottom. Um, so my kind of strategy is if we do start seeing Bitcoin come down to around $13,000 or so, and Ethereum come down to like let's say 600 $700, like I would probably just buy at that point instead of trying to catch the exact bottom because we don't know if we'll be able to. Um, so you're better off being in the asset with it in your cold storage than having your money on the exchange, trying to actually snipe that exact bottom because you don't know, they could halt trading or something like that, and you effectively can't buy, right? So my strategy is, if we do see some more capitulation down to 13K or for Bitcoin, or down to, like, let's say anywhere between 850 and 700 on Ethereum, that's probably when I would start putting in a lot of my cash for those assets, and then just kind of sit on them. Uh, and I don't really care at that point if the market does go lower, because we don't know what's going to happen as far as the exchanges go. Now, you could hold some of your money in stablecoins, but still, there is a slight risk there that, we don't know what's going to happen to the stablecoins yet. So, I think just being in the assets at that point would be probably the smartest thing to do. But yeah, I just wanted to do a short video um, on why I don't think that the bear market's quite over, and just some of the things that I was looking at, or I do look at, to signal to me what the state of the market is. Um, Now, it's actually very interesting that X has been holding up quite well. Um, so this is it's at 3.1 cents, right? So, and it's been holding for quite some time now. So I think we could possibly get a little bit more downside depending on the macro. But I think that this is almost the bottom. I don't know for sure, but it's been holding quite well through all these turbulent times in the market. So that just signals that there's a lot of price stability at about 3 cents. Um, Once again, not financial advice. Please always do your research on these things. Um, but yeah, I just wanted to do a quick video for today. Not too much going on, so yeah, I will meet back with you guys on Monday. Crypto Winter Bull out.